Welcome back, friends. This video is in response to request of many subscribers who seem to be quite worried and concerned about the United States conducting a large-scale attack on Venezuela overnight, capturing its president Nicolas Maduro and his wife, and then taking them to the United States. And right now, they are in a Brooklyn deportation center in New York. So all this has raised many questions. Firstly, regarding the international repercussions of such a move, whether this was justified under the international law, and what are the economic repercussions as the markets, the oil markets, the equity markets, the gold, the silver, the precious metals, all this get ready to open on Monday, which is the January 5. Now, as you know, there is concern that Venezuela and the chaos that this is there, the US invasion has caused, can lead to oil prices perking up. And since many countries such as China and India are net importers of oil, this can have an impact on oil prices as the markets get ready to open on Monday in a few hours from now. Net importing nations such as India and China will therefore feel the impact, and the equity markets can also get concerned. As you know, there was embargo, there were sanctions on import of Venezuelan oil for quite some time. In fact, Reliance had got an exemption specifically to be able to import Venezuelan oil because the Jamnagar refineries are used to processing heavy oil which Venezuela produces, but they were available at a very big discount. So they were profiting heavily from Venezuelan oil. Now all this was definitely something that was going on for quite some time and is not something that is new to the world. The important thing to note is that the government overthrow in Venezuela, in my opinion, is really unlikely to disrupt oil markets, as the South American nation, Venezuela, produces only about 800,000 barrels of oil a day. The uncertainty of a new regime for Venezuela, which has the world's largest oil reserves, may, however, have got some long-term implications for the energy industry, which therefore I may hasten to add that President Donald Trump's overthrow of President Nicolas Maduro in oil-rich Venezuela is unlikely to shake energy markets in the very short term, according to my analysis. There may be some knee-jerk reaction, but it's going to be very temporary. While the scale of the US attack was pretty much unexpected, markets had already priced in a conflict with Venezuela that would disrupt oil exports. Okay. Venezuela, a founding member of the OPEC, has the largest proven oil reserves in the world. Okay. But the South American nation currently produces less than 1 million oil barrels a day, which is less than 1% of the global oil production. It exports just about half its production, or something like 500,000 barrels a day. So the conflict also comes as the global oil market is oversupplied and the demand is relatively weak, a pattern that is customary in the first quarter of the year. The Brent crude prices may, as a knee-jerk reaction, rise by just about, say, $1 to $2 or even less when the futures trading opens on Sunday night in the United States. And the Brent will edge lower next week than when it closed out on Friday as the week advances. Despite this being a huge geopolitical event, and you're seeing television screens flashing images of the president being captured and taken to the detention center in New York. And that is raising a lot of concerns. The more you watch, it's the same thing that is getting repeated again and again and raising concerns. But despite this being a huge geopolitical event that you would normally expect to be positive or would push up the oil prices, and therefore that could be a source of concern for stock markets like in India and China as they get ready to open in another 12 hours from now. The bottom line is that there is too much oil in the market, and that's why the oil prices, I don't think, are likely to go ballistic. Therefore, it is just about a third of the Venezuela's oil production that was at risk. So, all of the Venezuela's output cannot be cut off at this point of time. And this does not pose, in my opinion, a meaningful risk to the oil markets in the short term. The oil market, as you know, in 2025 posted its biggest annual decline in 5 years. The global benchmark, Brent, fell about 19% last year, while the US crude lost nearly 20%. The market has been under pressure as OPEC Plus ramped up production after years of output cuts. United States also produced at a record level of just over 13.8 million barrels per day. So that's meaningful. Okay, and this is just 500,000 barrels per day, Venezuela. So oil prices may decline, in fact, further over the long term as the regime overthrow raises the possibility of eventually boosting oil production in Venezuela. That exports could approach 3 million barrels in the medium term if a new Venezuelan government led to the lifting of sanctions by the United States and the return of foreign investors. So if anything, I would say that the future of Venezuela and the election of a friendly head in the Venezuelan government will have a bearish impact on the market, not bullish, or would not cause the oil prices to actually go up, but may go down in the medium term. Okay. Currently, the embargo on Venezuelan oil is still in effect, according to Donald Trump at a press conference in Mar-a-Lago, where he was when the attack took place. He also said that the US oil companies will invest billions of dollars to rebuild Venezuela's energy sector. Trump, of course, did not provide details on which companies would invest or how. Or did he clarify how the United States would temporarily run Venezuela with a group? So, but let us be very candid, it is rather difficult to predict which oil companies will invest given the uncertainty about the interim and future governments in Venezuela. And besides, history has shown that everything that we have learned about government transitions from Iraq, from Afghanistan, from other countries is that the transitions are very hard. No company is going to want to commit to invest billions of dollars for a long-term operation until they know what the terms and conditions are. And they cannot know the terms until they know that which is the government that is going to come into place. Nevertheless, Donald Trump has stuck to his word. Whatever he has talked has happened so far. It is quite likely that they may have a government at the helm in Venezuela, which is friendly to the Trump administration. If that is the case, definitely there will be talk of increasing the production in Venezuela, which will probably bring in more output in the world oil markets, and that in fact can have a bearish impact on the world oil markets. So, and in fact, you may have noticed that United States and other nations, including China and Canada, have of late weakened their climate policies as the sales of their electric vehicles or EVs have fallen. So the prospect of investing in Venezuela has become much more attractive because it seems that the world is kind of going back to oil, and as President Trump calls it, drill baby drill. So that, I think, going to drill more in Venezuela. More oil will come to the markets. I don't think there's something to be so terribly concerned. Yes, there could be some knee-jerk reaction in the oil markets, even in the precious metals, equity markets, but I don't think that will sustain a long period. So let me calm some nerves of yours. I think we will be back to business very soon. And there will be other factors that will come into play in various parts of the world. Like in India, the focus will turn towards the budget, other things. So I don't want to sensationalize the US attack on Venezuela as being such a big thing that can turn the world financial markets, the world crude markets, and the world precious metals markets. Some knee-jerk reaction, and then we'll be back to business. To get to know more, do join our Premium Merit, which covers equity and commodity markets plus precious metals all in one package. Number to get in touch, you can WhatsApp us 982-086-1044. And of course, if you are in the United States, then you can join our Prime Plus, which gives you 2 weeks predictions of the US markets. So the number to get in touch, 732-732-2720. Happy investing. Have a great week. Take care. Bye-bye.